Find Winning at Life basically everywhere. You can find us on Facebook, Twitter, YouTube, iHeartRadio, Spotify, Periscope, Twitch, Dailymotion, DLive, Smashcast, Stitcher, Apple Podcasts, Google Podcasts, CastBox, Castro, Podomatic, Overcast. Did I say Spotify? I think I said Spotify. Anyway, we're everywhere. We prefer you listen on the Winning at Life app, and you can use that app to find us on your preferred platform. Stand by, the show's starting soon. Winning at Life with Gregory Ricks starts in 4 minutes. If you're interested in learning more about money and the financial world, have you checked out the Ask Gregory podcast? The Ask Gregory podcast has financial topics covering everything from how to handle your 401k to Social Security rules to student loans to precious metals. It's all the best segments that we've done on Winning at Life, and we condense down into specific topics by episode. So if you want to know more about money and investing and retirement, that's a great place to start. Find the Ask Gregory podcast on the Winning at Life app, iHeartRadio, Spotify, podcast app on your phone, and about 1,000 other places. I mean, don't go do it right now because the show's about to start, so just sit tight. Winning at Life with Gregory Ricks starts in 3 minutes. Hey, I'm your co-host, James Parker. You can find contact info to some of our show partners, including the Total Wealth Authority, on the Winning at Life app. If you're looking for a financial advisor, start your search with Gregory Ricks and Associates. If you have a mortgage issue, try Dwayne Stein at Mortgage Gumbo. If you have tax issues, try Jude Heath, CPA. And if you have some estate planning questions, try Wes Blanchard. These are all members of the Total Wealth Authority. You hear them on the show on a regular basis, and they're all linked on the Winning at Life app. Winning at Life with Gregory Ricks is starting in 2 minutes. You can listen to previous shows on demand with the Winning at Life app, the iHeartRadio app, Spotify, whatever. It's just the Winning at Life podcast. Now, that's different than the Ask Gregory podcast. The Ask Gregory podcast is episodes sorted by topic. If you just want to hear recent shows like yesterday's show or the show from Cast, it's available everywhere as well. The Winning at Life app, iHeartRadio app, Spotify, Apple Podcasts, Google Podcasts, the whole drill. Hey, why aren't you already following Winning at Life on all of our social media platforms? You can find us on Facebook, Twitter, YouTube, iHeartRadio, Spotify, Periscope, Twitch, Dailymotion, DLive. All these places are linked directly on the Winning at Life app. So download the Winning at Life app, whatever platform you prefer, find us there. We'll come to you. Stand by. Winning at Life with Gregory Ricks is going to start just a moment. Winning at Life with Gregory Ricks starts in 1 minute. Have you downloaded the Winning at Life app? You can listen to the show live. You can also watch the video version of the show live, or you can listen or watch to recent shows of Winning at Life on demand. There's no cost to you. It's in your app store, the Winning at Life app. Welcome to Winning at Life with Gregory Ricks. I'm your co-host, James Parker. Thanks for hanging out with us today. Stand by. The show is about to begin.
Hey, y'all. You're listening to Winning at Life. Yeah, it's the nightly show. We're bringing you live financial news talk radio. I am your host, Gregory Ricks. Thanks for joining. Some neat things about the show. We take calls. That's right. That's valued content for us. I like the questions. I'm a financial advisor, money manager by day, founder and CEO of Gregory Ricks and Associates, a total wealth authority. And you can catch us over on Facebook Live, the Winning at Life page. Also, text, email, call us through the Winning at Life app. It might be your smartphone's favorite app. Just try to download. No cost to you. Or you could just call us the old-fashioned way. Dial us up, 504-2600-995. You probably have some questions about your 401k, maybe what's going on with taxes, inflation, the economy. Where's all this headed? What should you do? Should you retire now? Work longer? Well, it also might depend. How much do you have saved? We'll use the first name you give us, that only. We don't share anything else that you give us when you call in, if you give us much of anything. But we do want to know the question in advance. I don't get all of that, but we kind of want to make sure it's relevant content. That's just a couple of rules of the road to get on the show with your question. And we'll give you some guidance, try to help you. And we've been doing this show for, more than 11 years now. And what I kind of define that we do is we help you improve your financial decisions. See, it's more impact by your decisions. Some people think it's, I didn't get the right stocks. I didn't get the right annuity. I didn't get those tax deductions. Sometimes, most of the time, it's your financial decisions. Even more so, it may not be about your investing. It might be more about your saving and putting money away. One of the things I shared on Saturday's show is about Buffett, historically one of the greatest investors, not one of the only great investors in history, going back over 100 years now. There's been some other great ones, but the one we know of, he's that living legend. But to share something with you is part of every financial decision he's made has not been great, but he has saved for a long time. I am not sure what his net worth is, but it's considerable. He's one of the wealthier people on the planet. And a neat little tidbit about that is more than 80% of his current wealth was achieved after he qualified to turn on Social Security benefits. And no, he didn't get wealthy because of Social Security. It was the compounding of his money over time and allowing it to work. Because when you start saving young, putting money away, it's going to seem like forever for it to really start growing. Probably the hardest part is the first 100,000. The second 100,000 is going to be a lot easier because it will be accelerated. It could double in 10 years. Could double in 12 years, could double in 8, but it's doubling along with you continuing to add money to it just from the compounding effect of doubling money. So just think about that way. It's harder to save early on and it gets easier. Back half of life, you can probably save more. It gets easier. Where's most of your wealth going to come from? Beyond age 40, even though you might be one of those that have started at 20 or 25 or 30. Think about that. Give us a call if you've got some questions, want to talk about that or any other topic. 504-2600-995. I've got a number of events going on this week. Clients that are listening, hey, if you've not came in and sat in on one of our update meetings we're having, let's see, I've got one tomorrow at 1:30 and another at 5:30. And on Thursday, same thing. We'll have some wine and snacks, sodas, water there, but we're going to talk about three things. One being how to adjust portfolios to a changing environment. Even protecting when, you have that, like the market drops and nobody really saw it coming. It's kind of like the COVID-19. We're going to talk about some of our new tax models we're adding on as well, and the new Gregory Ricks and Associates client portal, the guided planning system portal. So we're talking about those things. And the one of portfolio adjustments, or you might hear a common phrase as being tactical, but that isn't fair to that as well. But it's where a block of your money is going to follow momentum. It will make adjustments to momentum, not necessarily going to be passive and say follow the indices. And then when there's that event that happens, seems like every decade, thereabout, where the market will move down 20, 30%, or even more. How is that going to impact you? Would you like that to be leveled out some? So those are the kind of things we're talking about. And you need to call the office, 504-832-9200, to reserve a seat. We do have room for you to call and come in. If you're not a client of the firm, Gregory Ricks and Associates, I invite you to come sit in as well and listen to the things that we're doing and say, are you getting care like this? Are you being looked out for like that? You might want to come and set in on that. What else do we have on the list, James, of stuff going on? I've got something going on in Metairie, Louisiana next week.
That is November 10th and November 11th in Metairie at Fleming's. It's the Wine, Wisdom, and Food Experience. Now, this is the one you've been doing. These are not the pop-up events. This is when you want to sit down.
This is kind of the tire kicking introduction to Gregory Ricks and Associates. We're going to have some good food. It's going to be paired with some wine, and it's a fun time. It starts at 6:30. You would need to, with an RSVP, be in your seat by about 6:10, 6:15, because we actually start a little bit early. But I'd say it is really important I pulled together a lot of information compressed in a short period of time, and to see if you might want to explore adding us to your team to help you improve better financial decisions. We're going to talk about the Invest 50/50, why that may well be a better way to grow your assets. Could it increase the probability of success? That's what we're talking about. And what we're talking about is ultimately you have to decide who is going to help you get to that financial destination you're looking to arrive at, that you're on the journey for. It's kind of like I always look it's a decision at some point. You should have us as a part of your team to help you move forward. It's kind of like Sir Edmund Hillary, you know who he is. He's the first to reach the top of Mount Everest. And he had attempted that a few times before unsuccessfully. And then he hired a Sherpa to guide him. Now, I was thinking about this the other day, the conversation with the Sherpa there, like, I need you to get me to the top, but not in such a way that we put at risk getting off the mountain. And he may have had it and may have asked it that way, but it doesn't do you any good to save up all this money if it doesn't take you through retirement. Because what's the most dangerous thing about Mount Everest? It's the coming off that mountain. You're at the end of the day. The storm's probably coming. You're lacking oxygen because it's thin air up there. Extremely tired. Your decision making is going to be poor, and you need some help. That's what my firm does. It helps you with the financial aspects of your money, distribution, decisions, and overlooking it at a very high level. So I know that's a long case, but that's why I think people should be signing up in droves to come to my events, and it's harmless. You can't buy anything there. You can't become a client. You can't make any commitments except, we'll ask you at some point, there's a pink sheet. We'll ask you, would you like to set up a visit and come into the office and talk to somebody? That's the only thing we'll ask you. And another thing I'll ask you is, did you have fun tonight? That'd be the other thing. Call the office, 504-832-9200. If you're not sure, listen to the rest of the show. Maybe I can talk you into coming to an event.
Yeah, we don't know what Sir Edmund Hillary's Sherpa discussion looked like, but it wasn't at a steakhouse, with climate control and a nice selection of matched wines to go with each course.
But he did get him off that mountain.
He did. All right, and that's the important part. 504-260-0995 if you have a question for the show. I'm James Parker. We are Winning at Life with Gregory Ricks.
Take back control of your retirement. Hi, I'm Gregory Ricks. Join me at Fleming's Steakhouse for a wine, wisdom, and food experience. Wednesday, November 10th, or Thursday, November 11th at 6:30. We'll have great food, wine, and talk about strategies to help you win at retirement. Visit GregoryRicks.com to reserve your seat or call the office 504-832-9200.
Investment advisory services offered through AE Wealth Management, LLC.
Parents, grandparents, relatives, and guardians, it's Dwayne Stein, your trusted mortgage advisor. Did you know your loved ones spend 26% of every earned dollar on rent? That's 10% more than homeowners. So I'm encouraging you to help me spread the word. With today's lowered rates and loan programs, homeownership is easier than ever. So let Mortgage Gumbo review homeownership options today. Visit snapsendandsave.com. It's that easy.
If you like money, you'll love the Winning at Life app. On the Winning at Life app, you can hear the Ask Gregory podcast, where you'll find episodes based on a financial topic. So if you're looking for help on a specific situation, there's a good chance you'll find it on the Ask Gregory podcast, including episodes on 401ks, taxes, stocks, Social Security, gold, and whether or not you should buy an RV. Hear the Ask Gregory podcast on the Winning at Life app, your wallet's favorite app.
Half of estate planning is having a plan put together for your loved ones when you pass away. The other half of estate planning is dealing with someone else's plan when they pass away. Sometimes they have a great plan, but sometimes you need a little help. Don't leave your loved ones in a bind. Call me, and we'll make sure you have a plan. Hi, I'm Wes Blanchard, an estate planning attorney in Metairie. What's your plan? Find me at wjblanchardlaw.com.
The Ricks Report with Gregory Ricks.
At the core, I always tell people, I'm not here to make you rich. I'm here to make sure you don't run out of money, that you don't run out of income. That's how I look at my job. Over time, saving, making good decisions can make you rich. But what you have is, what is your core thing? Your core thing should be making money. And your core thing, you should set aside money to work elsewhere. It doesn't necessarily mean you have to put it to risk. You could put it to safety. But your core thing makes you money, or you tell me your core thing is the market, day trading, or gambling in the market. It shouldn't be. You should have a core thing that makes you money, and you peel some off for the future when you're done with your core.
Winning at Life with Gregory Ricks. Find us on the Winning at Life app or winningatlife.com. Investment advisory services offered through AE Wealth Management, LLC. Investing involves risk, including the potential loss of principal.
Those stars need to be wished on. Your skin needs to be kissed on. My eyes, baby, they're fixed on you in your snapback. T-shirt, your favorite rock band. Checking your makeup.
Hey, y'all. Man, my head is so full of stuff to share with you guys. Hey, I'm doing a wine wisdom and food event next week over at Fleming Steakhouse. What's the dates of that, James?
You're doing two of them.
Two of them.
Wednesday, November 10th, Thursday, November 11th. You get steak 2 nights in a row. Hope
Yeah,
that's okay.
it kicks off at 6:30, but you kind of need to be there for 6:10, 6:15, but they're not going to let you in without an RSVP for the event. And yeah, we're going to have some champagne, some wine, and some steaks, and we're going to have a financial talk. Some of it from me, and I'll have a couple of surprise guests there as well to share with you a couple of thoughts and ideas regarding that. I think it's going to be a blast, and it's tire kicking session, but it's also, I'm going to give you a whole bunch of reasons in a short period of time to why you should add us as the team that helps you make better decisions with your money, because that's really what it comes down to, is good decision making. It's not about, which stocks, which exchange traded funds, which annuities, which bonds. You know what? Everybody can kind of do that. The bankers can do that now. All kind of firms can do that. And, and you might say, well, who is Gregory Ricks and Associates? Well, I've been doing this radio show for 11 years, so I'd say there's a little bit of credibility there. But with that said, we don't custody assets. We custody them over at Fidelity Investments. I'd kind of say they're the big dog on the planet. So you have to feel good about that. And conceptually, we utilize the invest 50-50 philosophy, and we'll talk about that, the event. But what you're ultimately deciding is who can successfully help me navigate these ups and downs financially to get to where I need to be. And retirement is about having choices. Do I continue working? Do I not? Do I have to work? Do I go on trips? Do I not go on trips? Do I leave money to my kids, or do I try to spend it all before I die? That's what you have. That's what money does for you, is give you options. Do I buy a 10-foot Christmas tree or a 6-foot Christmas tree? Do I buy a real one, or do I get one of those I can repurpose every year? Well, you might need to use the one you used last year. I hear there's going to be a little shortage of those things anyhow. So call the office, 504-832-9200, 504-832-9200. If you can't wait for that, need help, got a question, don't want to call the show, call the office, ask the question. We will get you some help. I've got office over in Baton Rouge, Louisiana, Metairie, Louisiana, Mandeville, Louisiana, and Gulfport, Mississippi. But we can do phone calls from anywhere with you. We can do video meetings. Most, you hear those referred to as Zoom meetings, new technology age. Or what I like best is sit across the table at one of the offices and have a discussion. During the 15 highest inflation years, using the Consumer Price Index as the benchmark over the last 100 years, it's 1921 through 2020, the S&P 500 stock index has been up 7 years and down 8 years. The index's average performance for the 15 years, we're talking about the 15 highest years, and that was in the range of 1921 to 2020. The 15 highest years that popped up during that last 100 years. It was up 7 of those 15 years and down 8 of those 15 years. Guess what? It averaged 2.5% per year. So what I'm going to tell you is, yeah, some things are going up more. Some things aren't going up. I don't know that anything is actually going down in that case. But another point during the last, 179 years? 179 years? Let's try this. We had annual inflation exceed 7% in 20 separate years. And I'm just giving you there the 15 highest. You averaged the market, and it was 2.2%, 2.5% per year average return. So this isn't something necessarily that crushes you. And I said 179 years. It's 170 previous years of the 20 years that were above 7%. So this isn't something that's going to go on forever or be crushing, but it is an adjustment. And we've had the previous decade, we've had inflation average under 2%. So I'd say this is a little bit of catching up that has happened out there also. Let's take another look at the markets while I'm thinking about it. Split between up and down years. And let's look at the S&P 500 over the last 71 years. You know, and I'll tell you this, giving you a few examples where we go back a long ways, but I think probably the most important period to look at is where the most volatility has been, and that's the last 21, 22 years, I think are important to kind of keep in mind. With that said, the last 71 years, measured by days up and down, 54% of the time, the market was up. So it's kind of like you check your account every day. It's kind of 50-50. It's going to be up 54% of the time and down 46% of the time over the last 71 years. If you look at 5-year rolling time periods since 1950, rolling time periods means each year you look back 5 years is what I'm talking about. Did I define that right, James?
Oh, yeah.
It's rolling 5 years.
So it's
every
not like the
year
50s
we're
and the
looking
60s,
at a
yeah.
5-year period. So over the past 71 years, looking at 5-year rolling time periods, it's up 79% of the time, which means it's down 21% of the time. 10-year rolling time periods, it's up 89% of the time. So what's your time horizon? How long do you have for that money to work? So far, 20-year rolling periods, guess what? Looks like the market's up 100% of the time when you take 20-year rolling periods. So that's why it's important. How long does that money have to work? And I talk about the invest 50-50 a lot, but one thing I think the 4 asset classes is also another form of diversification. Remember, diversification doesn't always work, but it works over time. And another reason for diversification is, let's just look at it simply from a stock standpoint. Can you buy enough stocks and diversify properly that the bad ones don't hurt you much? The thing is, all stocks aren't going to work. Most stocks don't outperform 30-day treasuries. 99% of, well, I won't get into that stat, but just everything doesn't last. One of the historically great companies on the Dow, it was knocked off a few years ago, GE, was held in very high regard. And ultimately, yeah, its price came crashing down. Investors were crushed, especially when the ridiculous dividend they were paying was eventually cut. It just couldn't keep up. So when we talk about diversification, everything doesn't work all the time. I like in the invest 50-50, I like stock ETFs. I like bond ETFs. On the stock ETFs, I like using the indexes, the indices. I like index-linked investing. It's kind of like an algorithm, but we use insurance companies to take away the risk, but we get the portion of the upside of the market with no downside negative exposure. Then I'll kind of, lack a better word at time, a tactical approach, meaning money that will have to where it follows momentum. And then, those surprises, the thing that you can't anticipate, which is probably kind of the real risk out there. Say the market's going to drop 20%, 25 or 30%, like that back in March of 20 when that happened with COVID. Money can adjust and minimize that downturn. But do any of them work all the time? No. And that's why you need a rotation of that, so you do increase the probability of success and kind of smooth out that bumpy ride.
If you got a question for Gregory, it's 504-260-0995. We are Winning at Life with Gregory Ricks.
Hey, James Parker here from Winning at Life. Something that's come up on the show over the last 10 years is that if you're not at your old job, maybe your 401k shouldn't be either. But do you really know why we say that? It's a funny thing. We put a few $100 in our 401k every month. It ends up to be thousands of dollars every year, hundreds of thousands of dollars over our career, and you don't really know that much about it. How do you invest it? How do you diversify? What do you buy? What do you avoid? If you've got a financial situation and you're not quite sure what to do, ask Gregory. Ask Gregory is our new podcast with these financial topics broken down into specific little chunks. So if you have a financial situation or you just want to learn more about money, ask Gregory. Find the Ask Gregory podcast on the Winning at Life app, the iHeartRadio app, Google Podcast, Apple Podcast, and Spotify.
And I want to thank you for all of your help.
That's exactly what I needed to know.
Investment advisory services offered through AE Wealth Management, LLC.
2 questions. Do you have a pulse? Do you own anything? If you said yes to both, you probably need a will. You may even need a trust. We all know a lawyer. Do you know someone who specializes in estate planning? Do you really trust the husband of your sister's friend from college? Or would you feel better putting your family in the hands of the estate planning attorney of the Total Wealth Authority? I'm Wes Blanchard. What's your plan? Offices in Metairie and at wjblanchardlaw.com.
Most people think of Crime Stoppers as only a tip reporting line, but we're so much more. Crime Stoppers G&O has worked in our area schools, offering prevention presentations on trending topics from drugs, bullying, online safety, suicide prevention, and much more. And we have a high school teen leadership program which provides students with a first-hand look at the criminal justice profession as a future career, while learning to be an advocate for their fellow students. So to learn more, visit safeschoolsla.com or call 504-837-8477.
If you like money, you'll love the Winning at Life app. On the Winning at Life app, you can listen to the show live 6 days a week. And if we're not on at the moment, you can hear a replay of the latest episode of Winning at Life. Whether you're getting a late start on your retirement savings or keeping up with the financial news, Winning at Life with Gregory Ricks is there on demand. Hear the Winning at Life show on the Winning at Life app, your wallet's favorite app.
This is a Fox News Alert. I'm Rich Dennison. A tight gubernatorial election in Virginia, where it's too early to call the race between former Democratic Governor Terry McAuliffe and Republican Glenn Youngkin, which could impact the State House.
There are 100 Virginia delegate seats, and all but a handful are being contested. Republicans need 6 seats to take back a majority from the Democrats, who have a hold on the House of Delegates, the Senate, and the governor's chair.
Fox's Jessica Rosenthal in Loudoun County, Virginia. A CDC advisory panel recommendation that Pfizer's coronavirus vaccine be used in 5 to 11-year-old children given final approval tonight by agency director Dr. Rochelle Walensky.
Pfizer, in anticipation, has already begun the packing and shipping process for the doses. 1/3 of what adults get, found to be 91% effective in preventing COVID symptoms.
Fox's Gernal Scott. This is a Fox News Alert.
Winning at Life with Gregory Ricks is a copyright of Down South Strategies for the private use of our audience. Any unauthorized use of this broadcast without express consent is prohibited. For podcasts, show information, and contacts to our sponsors, go to winningatlife.com or download the Winning at Life app. If you've got a financial situation and you're not quite sure what to do, you better call Gregory. We are Winning at Life with Gregory Ricks.
And a little bit of chicken fried.
Welcome. This is Winning at Life with Gregory Ricks. It's the Money Show. If you got a question for Gregory, 504-260-0995. EB in Gulfport, you're on Winning at Life with Gregory Ricks. What can we do for you?
Hey, good morning. Got a question about, it's something I've seen described. It's called indexed universal life. Some way of using life insurance to, as a different avenue for some retirement savings that gives you a little upside in the market, prevents you from losing too much on the downside, but also is life insurance. Kind of a new thing, or I don't know if it's actually new or not. It's just kind of popped up on my radar, and I was curious what you know about it and what are your feelings on that sort of a product.
Universal life also is called flexible premium life insurance. There's a variation of this that has risk called variable life insurance. Not a big fan of that product. I think it's kind of very expensive internally. So if it says variable, it also means you're saving money inside of a life insurance structure that can go down when the market goes down. That just doesn't quite make sense to me, and I don't like paying exorbitant fees. And if I want mutual funds, I'd rather have ETFs, and I'd rather do that outside of my life insurance policy. So I think we've settled the variable part. Indexing, in the Invest 50/50, I like me some ETFs, exchange traded funds that have stocks. I like asset class that has bonds in utilizing exchange traded funds. I like index linked investing. That's where we get the upside without the downside. And I like tactical investing. So go back to the index linked. That's what we're speaking of here with this life insurance, index universal life. So it's flexible premium, so they can design, the premium can be flexible depending how long you want coverage to build or how much you want savings to go into that bucket in excess of mortality costs. So remember, on the structure, there's something called mortality, and think of it as 1-year term rates, and 1-year term rates are based on mortality. So each year we grow older, we grow a year towards that expiration date that we all have. We just don't know what it is. Some can come abruptly, some's going to be a long ways away for some people. But 1-year mortality rates go up every year, so those internal costs increase. There's probably an annual fee inside of the policy as well. But what we find is market, if we look at the markets by decade, they go up, let's say 7 out of every 10 years. So if you're having a 1-year reset on that EB, your account's going up 7 out of 10 years, looking at a historical perspective. And so it means out of every 10 years, there's 3 down years. But when it's index linked like this, those negative years turn out to be zeros for you on those years. So you don't lose account value. And we're making money most of the time, we're making money to the upside, which I think that increases our probability for success going forward. What are your thoughts?
And the 0 years, the index part of it, from what I'm reading, is you've got some participation in the upside. The 0 years don't hurt you short of whatever you're paying in the life insurance fees or whatever that year. There's going to be expenses involved with it, but the 0 years, a lot of these things, I'm just now sticking my toe into looking at this, but it looks like some of them guarantee, participation 5 or 6% on the upside with a 0 or negative 1% to the downside. So if the market, whatever the index is invested in, if it went down 5%, you're going to take a 1% haircut. But if the market went up 10%, you're limited to only getting 5 or 6% of that gain. So that's the guaranteed part of it. It's still life insurance. It's still somewhat investing. And I know you're a really big fan of indexing because it spreads your risk out a lot more than individual investments.
Yeah,
so,
let's talk further about this real quick here. Is now when we get the upside, I need to make sure that's clear. We're talking about a portion of the upside. So like using an annuity that gives you that index link to the upside, it's going to be I like participation rate, meaning say 40 or 50 or 55%, depending on what the par rate is at this time. I like getting that upside, but that's going to be the cap. We're getting, say, hypothetically, 50% of the upside. On the life insurance, they typically have a cap based on the percentage of gain. You might get all of it up to 8% or 10% or 12%. That varies. And you typically have different choices of indices. I'm a big fan of par rates, but one thing you should look at, and it varies by insurance company for life insurance, is how those are structured. And there's this document called an illustration. It's a forward-looking document that also has historical values built inside the document. This thing could be like 10 or 20 pages, but you don't necessarily need to read all of it, but you need to look at the part that's projecting from where you're going now to age 100. And they'll show a guaranteed rate. They'll show max mortality. That means if a lot of people start dying all the time, mortality could be increased. But we're really not having to worry about that because we know how that goes historically. Everybody's not going to start dying all the time, or if it is, then nothing matters anymore, right? Get that? Okay, so then we're looking at what is the estimated based on a historical that they're using, and I'm usually seeing those run at like 6.2, 6.5 right now. I'd rather say, let me see the number at 5.5. I want to dial it back so my expectation's not disappointed. I'm not going to go in there and say they ran it at 6.2, so wow, that's what I'm going to get. No, I'd rather see it dialed back. But I also want to look at those historicals. Yes, be a little conservative there and look at the different ways you can link that and kind of do something that makes sense. If you're working with me or my team, we're going to give you guidance and perspective because we do understand how this works. It's like we're trying to climb out, reach the peak on Mount Everest, but you're kind of saying crossing this glacier this time of day, look, we shouldn't do this. If we got to go, we want to take a different path, or maybe we should wait till tomorrow. We'll help you on choosing those indexes right there that's going to increase your probability of success. And this is something that you're not locked in. So typically, depending on structure, you can make these changes every year or two going forward to make adjustments. Because just like, the market does not work the past 40 years like it did the previous 50 years. It's a whole different mix. So think about that.
some of the strengths that I'm reading into the literature I've been researching is it's a way to build up some money for retirement. You can structure it to where you want to start borrowing out of it, later in life. And as long as it doesn't kill the policy, there's no tax consequences. There's no RMDs involved with it.
Right.
It's I've heard of life insurance and whole life insurance for years. You can invest in that and borrow against it later, but not got the returns on those sorts of funds because they're normally very conservative versus this concept, which is kind of neat, that if you're investing in index funds or it's being invested on a return of the index, more potential for upside, of course, but it's got that protection on you can't lose everything on the bottom side if there's 2 or 3 years of bad returns.
Right. Are you looking from this as it distributing income to you in the future?
Yes.
Have they talked to you about?
Yes.
Well, let me address that before I run out of time here. And basically, that's kind of describing my max funding strategy. And it's kind of like, this is a great thing to consider if you've run out of places to fund your Roth IRA or your 401k and pre-tax stuff, but I've got other money. How do I create tax efficiency? There's a strategy where we can max fund these to a limit. It has to be MEC tested because the IRS says it's still got to act like life insurance, and we want it to act like that. But I want to win from a tax standpoint, and that's where we can go in, run an illustration, and max fund it. And it might be an example of putting $30,000 a year into this. Now, you're getting a lot of insurance, and you might do that, say, for 5 years or 7 years or 10 years and do a deferral of 10 years or 5 years, and then you start taking out money. You're going to end up taking out much more than you put in over time. And therefore, you're beating Uncle Sam when you think about it. And that's where we're not getting, all you're averaging is 5%. Yeah, I'm good with 5% because the way, in just a hypothetical scenario is, yeah, I'm putting in 100,000, but I'm going to take out 300,000 and I'm not going to be taxed on it because the death benefit washes that loan that I took out tax-free. So that's a lot of information
anything that's left over.
Yeah.
Yeah, but anything that's left over that you hadn't taken out yet passes on to your beneficiaries or whoever you're leaving it to.
Exactly.
Tax-free for them, too.
Awesome.
Cool. Well,
hey, EB, let's talk again.
Yes.
Yeah. Give me a call.
I would look forward to it.
Okay.
Thanks.
All right, if you want to be next, 504-260-0995. I'm James Parker. We're Winning at Life with Gregory Ricks. If you've got a financial situation and you're not quite sure what to do, you better call Gregory.
If you want to come in for a meeting, it's 60 minutes worth getting it right. How many financial plans have you built? I assure you, we've done quite a few more.
Gregory Ricks and Associates, 504-832-9200 or GregoryRicks.com. Investing involves risk, including the potential loss of principal. Investment advisory services offered through AE Wealth Management, LLC.
Mom, it stinks.
Hush, I'm almost done. All right, now you're safe from bugs in the backyard. Don't let mosquitoes ruin your outdoor fun. Call Mosquito Joe today. When you call, they come out and they do the spraying. Mosquito Joe's time-release capsule lasts for about a month. No more sticky bug sprays. Take back your backyard. NewOrleans.MosquitoJoe.com. NewOrleans.MosquitoJoe.com.
If you've got a financial situation and you're not quite sure what to do, you better call Gregory.
The single biggest financial regret of Americans surveyed by Bankrate was waiting too long to start saving for retirement. Respondents 50 and older expressed this regret at a much higher rate than younger respondents. Morningstar calculated how much you need to sock away monthly to reach the magic number of $1 million saved by 65. Assuming a 7% annual return, you'd need to save $381 a month if you start at age 25 and almost $5,800 a month starting at 55. You see, that just really becomes an obstacle when you delay.
Gregory Ricks and Associates. Find us at GregoryRicks.com or call 504-832-9200. Investment advisory services offered through AE Wealth Management, LLC. The Ricks Report with Gregory Ricks.
My age that I can claim Social Security is 66. If I wait to 67, I'll get an additional 8%. But you have to wait the full year. Do they prorate it like if you do it at 66 and a half, do you get 4%?
You get a credit for each month you defer. And here's a little technicality. Delayed retirement credits don't get calculated and applied till the beginning of the next calendar year. So if you're deferring and getting delayed retirement credits, and then you turn it on middle of another year, those delayed credits will be factored in the beginning of next year and made up for what you didn't have and paid at that higher rate at the next calendar year.
Winning at Life with Gregory Ricks. Find us on the Winning at Life app or winningatlife.com. Investment advisory services offered through AE Wealth Management, LLC.
Yeah, that's my girl in the passenger seat. Windows down, dancing around.
Hey, y'all.
That's my girl, sipping Crown and Sprite.
Got a couple of client update events going on tomorrow and Thursday at 1:30 p.m. and 5:30 p.m. Clients listening, call the office in the morning, 504-832-9200. We're going to be talking about the new client portal. We're going to talk about our new tax efficient models. Mike could define them as tax-free models, and a variation on tactical money management as an asset class added to the Invest 50/50. If you're not a client, call the office and join us as well in one of those 4 events over the next 2 days. Little wine, soft drinks, snacks, and some help in making better financial decisions going forward. Here's the office number, 504-832-9200. The website's gregoryricks.com. So that phone number's over there as well. You can get to it. Use Safari on your smartphone. That'll get you there. Safari can get you to one of those search engines as well. When I spoke about inflation earlier, in the past 70 years, we had 20 one-year periods separately that had 7% or more inflation. And I'm mentioning that between 1921 and 2020, the S&P 500 index had been up 7 years and down 8 years during the 15 highest inflation years, and they weren't consecutive years either. During that 5 years, the performance of the market averaged 2.5%. So once again, inflationary periods aren't necessarily doom for the market. Also, I've got another number here it is. And this is something James and I was speaking on one of the breaks earlier. And I mentioned to you, we're at, from the consumer price index, it's basically set that Social Security's going up about 5.4% COLA for next year. And inflation's up right now, I think slightly more than that for the year. Is that right? Slightly more than that for the year. And I'm just telling you, I think we're catching up. And here's a reason. When you go back and look at the consumer price index, was up 1.4% for 2020. For the decades of the 2010s, inflation was up 1.8% per year. The lowest decade of inflation in the USA since the 1930s. Thought that'd help you out. That's a little bit of what's going on, is eventual catch up. Below performing inflation, well, they say, we'll make up for it this year. So one of the questions that turns up at my public speaking events, mainly the wine, wisdom, and food, and I've got 2 of those next week over at Fleming's. If you want more information about that, go to the website, gregoryricks.com, or call the office, 504-832-9200. But the impact, I don't know, what was my thought? Did I lose my thought there?
The statistics are showing that we're not necessarily doomed. The markets don't always take the sharp downturn just because inflation goes up. And for the last decade, inflation's been unusually low.
Yeah. So where we're headed, and one thing we talked about on the break is actually where I was trying to get to. So we'll jump right over to that. Is looking back at what's the impact of they're going to unwind the bond program. The Federal Reserve is you've heard tapering. So yeah, that's eventually going to happen because they're pushing a lot of money into the system. So that's going to get dialed back and kind of come to an end. But that's kind of like raising interest rates right there, because the bond program is kind of the equivalent of us going negative. But then what's the market's going to dislike is the actual increasing of the Fed rate and drive up interest rates. In catching up, I think, and this is kind of taken from history, and it is repeated. I'll talk about it a little bit more on tonight's show, give you a little more background on it. But what I think's coming is, we're going to have some interest rate hikes. It's going to impact the market. But I don't think we're going to go see ridiculous interest rates like we did in the 70s. Because raising of interest rates, and look, I think the Fed's going to end up behind. I don't know that it may feel like they're every quarter or every Fed meeting, they'll be raising it a quarter point, but they're only going to do that for so long, because what they don't want to hurt is the economy. They don't want to make borrowing too expensive. We're a leveraged society. If you go back to your great-grandparents weren't about borrowing money. Your grandparents probably weren't either. And I speak of my grandparents because I'm 60. My grandparents wasn't even about the market. Why? They kind of grew up in the Great Depression. Yeah, the stock market is kind of bad. Bad things happen when you put your money in the stock market. But they weren't about borrowing money or being leveraged. Our boomers are a leveraged society where leverage has been okay. It's justified. It gets to where you're going as long as you manage it versus not doing it at all. You want to save up for 30 years to buy that house? No, it's not going to work that way. You want to save up for 10 years to buy that next car? No, it's not going to work that way. We leverage, and it's okay to an extent. Is it better to be no leverage, no loans? Yeah, you can argue that. But who is that? It's just when you mismanage it, it's a problem. So if they raise borrowing costs, oh my gosh, you're going to slow things down. Mortgages, you're going to make mortgages too expensive. Okay, you part of the economy is building houses and selling houses. They can't make money too expensive. And then, of course, we don't want to hurt the stock market on the other side. I'm saying we, meaning the government, the Federal Reserve, has to manage this where the economy keeps going, that money is easy to get. That's why I don't think we're really going to see interest rates. And I brought this up time and again over the past couple of years where we talked about, well, we're going to see we're getting close to 3% 10-year treasuries. But we didn't. I think we hit it one time over the past few years. I have to look back at our number. I kind of remember that. And then, boom, it was back down. And then I've even and I've done this recently, will we ever see interest rates go up a lot? Or is that going to become a myth? I think it's more on the side of actually being a myth that we're not going to see significant interest rates in the future, in the foreseeable future. I use Fed speak right there, but foreseeable future, I don't see significant interest rate hikes because and that's for taxes. They're going to pick on the wealthy, but the government also understands they can't crush the wealthy because they spend money and buy jobs, and they need people spending money, and they need that to turn over. But, to get votes, they got to have an enemy out there. Just think about that. And people want to better themselves and have the ability to get better jobs, to get a hold of money, to borrow money, to get that car, get that house, get that couch, send the kids to school, get the kids clothed. The kids need an iPhone. Spending has to continue, but it has to be affordable from that standpoint. That's kind of my argument of where I think we're headed. Interest rates are going to go up above where they are, but this isn't going to be some crushing thing. And if they go too far, you'll see them pull it back.
The client event tomorrow?
Yeah.
What time is that?
We've got a 1:30 and a 5:30 tomorrow.
All right, I just want to remind you about the client event tomorrow. If you're a client, you need to get updated. If you're thinking about coming on board, 504-832-9200. You might want to stop by Gregory's office tomorrow. I'm James Parker. We are Winning at Life with Gregory Ricks.
Investment advisory services offered through AE Wealth Management, LLC. Winning at Life with Gregory Ricks is for informational purposes only and does not recommend the sale or purchase of any specific securities, investments, legal advice, or tax advice. Investing involves risk, including potential loss of principal. Raw conversion is a taxable event and may have several tax-related consequences. Be sure to consult with a qualified tax advisor before making any decisions regarding your IRA. The information and opinions contained herein are provided by third parties and have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed. Neither AE Wealth Management nor advisors providing investment advisory services through AE Wealth Management recommend or facilitate the buying or selling of cryptocurrencies. The firm is not affiliated with the U.S. government or any governmental agency. The firm offers insurance services. We are Winning at Life with Gregory Ricks.
WRNO FM, New Orleans, an iHeart radio station. Available everywhere on our free iHeart radio app. #1 for music, radio, and podcasts, all in one.